The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. I've been asked by several people that have emailed me to do a segment about the history of what I've gone through to get to where I am. It should take about 30 seconds or less. But what I'm going to do is after the first of the year, I'm probably going to do a 1 or 2 minute segment on how I got started, some of the most interesting experiences I've had, the best trades, the worst trades, some of the people I've met, and something like that. That's the main thing. I wanted to start the show a little differently than I planned because I was listening to Basil talk about 9/11 and the things that happened and how bad things were, but it brought up what happened over the weekend with Sony Pictures pulling the movie The Interview, and I really think that was a very bad thing to do because I believe that we should have a policy like Israel has, that everybody in the United States should be considered a member of the armed forces. And if we are taken hostage, then we are a member of the armed forces and we are subject to prisoners of war. That's the only way we can live through this, because you cannot live with fear, folks. I know it's a terrible thing, but there's an old Scottish proverb that I remember very well. It says, "The brave man dies but once, but the coward dies 1,000 times." And that's what happens when you have fear. And here we have all these movie theaters that were getting ready to show this, and I'm sure that if they took a vote, that almost it would probably be 70-30 that most Americans would say, let's just go to the movies and forget it. I can remember as a little boy in Indiana growing up, I was taught by the Jesuits at St. Benedict's Catholic School. And for many years there, I don't remember exactly how many years it was through the late 40s and early 50s until early 50s when I got into high school, that we had to hide under the desks worried about an atomic bomb coming from Khrushchev. I mean, come on, folks. I mean, give me a break. I mean, fear means false evidence appearing real. You cannot live like that. I was listening to what Basil said about the folks that jumped out of the building, during 9/11, which is absolutely horrible. And these are the worst things. I mean, can you imagine someone 64 is up, thinks he's going to live, jumping out of a building? I mean, that has to be the most terrifying thing that you can have. However, the most terrifying thing that most people have is the fear of public speaking. And last Friday, I went to the church where my grandson goes to school, and they had a Christmas pageant. They had the 3-year-old class, the 4-year-old class, and the 5-year-old class coming out doing a Christmas pageant and singing Christmas songs. And would you believe it, folks, some of these kids in the 3-year-old and 4-year-old and 5-year-old classes were so petrified that their parents had to take them home. It was really sad to see how scared they were, to be afraid of going out in front of the people, to have an enjoyable day. But they were just literally, they were really scared. They were screaming, and they had to be, they couldn't go out onto the stage, and that's pretty much it. We'll see. Oh, well, the comment that I made about the brave man dies but once, that's a Scottish proverb. It was in Mel Gibson's movie Braveheart. And I'd seen it before, but when I saw it in that movie, it certainly reminded me of it. But, that's why a lot of people, have trouble in the markets, is because of fear, fear of losing. But, hey, if you have fear of losing in this market, you should find something else to do, because losing is like breathing in this market. You have to lose in order to win. That's the whole key to what we're doing. You just find the horses you can ride, and the horses that you can't ride, you get off and look for something else. And speaking of horses that you can't ride, it's pretty hard to be bearish stocks when you look at what's happened on the 18th of December, when we came off with that 3 drive to a bottom pattern at the 61% retracement in the New York Stock Exchange Index. That was a tremendously bullish sign down there. It was a Bradley stock market date. We only had a 382 retracement in the S&P, a 382 retracement in the NASDAQ, and the market exploded out of there. Now, the question is it going to continue to go higher? That's what it has to do. Now, I was very surprised at the fact that the market did go that much higher in one day. To be up 440 points in the Dow, even though it's lightly traded that day, that's still a very, very significant thing, folks. That's one of the biggest up moves we've had in a very, very long time. And now what we've done is we went up to the exact 786 retracement in the New York Stock Exchange Index, just like we have 3 times before, and we're going to find out here what's going to happen. Now, I posted into Tiger TV today, in the Tiger Den. It's a article that was written by a woman that was on Zero Hedge. And basically, she brought up the study that the most bullish days of the month are the last 3 trading days of the month, and also the first 3 trading days of the month. So we're coming into that right now. We're coming back after the Christmas holiday. We've got the 29th, 30th, and 31st. Those are the last days of the month. And, folks, when you're in an up month, in an up year, in an up week, it's almost impossible for that market to be down big time any of those 3 days. That's just the statistics behind it. Now, how much it's going to go higher and if it's going to work this time or not, I'm not sure. But you have to respect that date of December 18th. The other thing that I feel really strongly about, if we should ever go below that low of December 18th, and that was down quite a bit. We were down around 17,200 in the Dow, I believe, something like that, maybe even a little lower. That would tell us that we are going down, really big time. Whether that's going to happen or not, no one really knows for sure. That's the main thing. Now, I've had a question about gold because we're approaching a real interesting spot here in gold here in just a few minutes. It's getting down here on a Friday. We're down about $20. And I wanted to show you what's happening in the gold market just based on what I'm looking at right now. And that is that we should be coming down about another $10 down to about the 1171 level, which is a 61% retracement of this whole move that started, way back in November. We had a $100 rally off of that, and now we're backing off, the $60 retracement, which brings us into the 61% retracement in around 1171, 1172 in the gold market. That's what it looks like to me. The other question that someone asked me, I know these are commodities, but since this is Christmas time and we try to make everybody happy like Santa does, we're going to put in what I think is happening in the crude oil market. And that is that we're getting ready to come down one more time down to that 1152, 1151 a barrel. Now, that's my little grandson. He's going to help me do the show today. And then we will get to, that level, which is the 786 on the long-term weekly charts, down at $52 a barrel. That's what it looks like. We've already exceeded the 61% retracement of last week. We're almost at the 786 retracement of last week. So here again, that's telling us that we're having a pretty good chance of, getting to that level. So we'll be able to see what's going to happen at that time. Now, I had an interesting conversation with a very old friend of mine. Has been around for many, many years. He's quite famous, and it was really a interesting conversation because he believes that everything the Federal Reserve is doing is correct. He believes that the $4 trillion that's been brought to the country doesn't really mean anything because none of that will be paid back anyway, which could possibly be it. But he's very strong about that. He also believes there's not going to be a bear market in stocks until the yield curve flattens out. In other words, where long-term starts to get down to where the short-term is and people get scared, but, whether that's the case or not. Now, I wanted to post into the room a chart from Martin Armstrong. I know Martin, and I know that he would not be against me posting this chart, but it's basically, oops, that's the wrong one. Hold on just a second here. I got to get the right one here. There it is. Oh, dear, what have I done? I've got the wrong chart. Can you believe that? I've made a mistake. That's hard to believe that I've made a mistake, but I did. Dear, I deleted it. Shucks. Well, that's a bah humbug. On the next show, I'll pull it up and I'll get it back. I'll have to dig it up from the files and see where we are. But frankly, I'm not able to pull that up right now. It basically shows the if Mr. Z's in the room today, and I'm not sure if he's there or not, he has it and he could put it in there for me. I get Martin's stuff every month and look at it. He's a very brilliant fellow. He's tremendous with timing, and I think that's something that we always appreciate when we see some of the things that he's looking at, because it's really, really good. So what we'd like to do now is someone asked one other question about Apple. We've bounced back a little bit in Apple, not as much as the rest of the market, of course, but we have to understand that this low that came in on that S&P and the New York Stock Exchange Index and the Dow and all of those things is very, very important because of the fact that it hit those exact Fibonacci numbers on a Bradley date. Now, the Bradley dates are, far from perfect, but boy, when they work, you have to respect it, and that's what's happened this time. They have literally, come out of here very, very fast, much like they did in October. If you remember, the October 15th date was a big 61% retracement, and then 3 months later we get another one. So this is telling us the trend of this market is still higher. I know that the advanced decline line looks horrible, and we're having a divergence again in the New York Stock Exchange Index. But when you look at the Russell, the Russell, I posted that into Tiger TV today. The Russell has not made new highs on the year yet, but the IWM, but it still is really gone really straight up. Now these markets are doing it on less volume, of course, but they're still going up, and you have to look at that. You have to respect that. So like Roger Dangerfield said, remember, I get no respect. Well, this market deserves your respect. Now, when it starts down, then it'll give you a pretty good chance of, taking a look at it, and we'll see what's happening. We have another caller has asked us to take a look at the Japanese yen. The Japanese yen on the currency basis has gone a little bit above the 61% retracement that we've been watching for quite some time. We hit just about 707 today. If you'll give me a second here, I'll post this into the room because I was watching that today. We're about 20 pips off of that high right now. And the foreign markets did not do anything like what our markets did on the 18th. They had a rally, but nothing like that. So it's really, that's so much. Someone asked me about my confidence in the Bradley dates. I have a lot of confidence in the Bradley dates, folks, and the reason for that is I've gone back for many, many years, well over 100 years. Jim Twentyman and myself, Dr. Ruth Miller, we looked at all those dates, and boy, they're really powerful dates. Frank Tauscher, who wrote the Super Traders Almanac, was so confident about them that he thought that was the best timing indicator they'd ever seen. Got to take a break here with the Dow strong, gold down about $18. We'll be right back after Santa fills the stockings here at TFNN.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, it can only happen at TFNN, folks. Believe it or not, we got a call from St. Nick in Oklahoma City. Santa, is that you? Oops, maybe Nick got embarrassed because I called him Santa and we lost him. Anyway, his question was about... oh, Nick, are you there?
I'm calling from Titusville, Florida.
Titusville, Florida. How did they come up with Oklahoma City, Nick? I don't even know. Where is Titusville?
That's at the Cape.
Oh, way out there. Oh, okay. What can I do for you, my friend?
It's on the East Coast.
Oh, okay.
Where you launched the missiles from.
Yep, I know where Canaveral is, that's for sure.
Well, that's where I am.
How's your weather?
About 77.
Oh, dear. A little better than where we are. It's about 35 here. What can I do for you, my friend?
Since you're not covering commodities, how about covering silver?
Okay, I posted the chart into TFNN just a few minutes ago on the chart package that they have, and it shows silver making what I think is a really nice head and shoulders pattern. We need it to get down to about $15.30 an ounce to make it perfectly. We're at $15.59 now. That would fit in very nicely what I think could happen in gold, another $10 lower. But that's a really nice symmetrical head and shoulders pattern in silver. You know, it looks very interesting there, but boy, it certainly has to hold that $15 level in order to still be good. Because if we happen to go below $14 an ounce, we could see silver at $9 or $10 an ounce, very, very easily, because that $14 an ounce has been a very, very strong area of support for many years. So that's what it looks like right now. But I'm looking to be a buyer of silver down there at around $15.30 an ounce and risking about 25 cents. That's what it looks like to me.
Okay, appreciate it, sir.
You're welcome, and a happy holidays to you, Nick.
The same to you, sir.
Okay, thank you very much.
All right.
It's interesting about the gold and silver because, we had a $100 rally back in gold from the low that we made down at the 1131. We rallied up to 1239, so it was $109, and now we're backing off almost to the 61% retracement of that. So that's going to be very, very interesting to see if that's going to hold or not. Now, Fibonacci numbers, sometimes they hold, sometimes they don't. That's why you have to, place a stop in the things in order to protect yourself for times when the numbers don't hold up very much. That's one of the disadvantages, but it has to be one of the beauties of it too, because it tells you, what your risk control factor, happens to be. I know that crude oil is one of the most talked about things in the news lately. Because everybody's, now they're talking about $40 and $30 and $20 a barrel oil and stuff like that. And, when you got everybody lopsided, and believe me, crude oil has been going down it's been going down a long time. But back in July when it broke $90, which was the trigger that it wanted to go a lot lower, it was telling you that the prices were going to go at least to the 618. We went through $64 a barrel like it didn't exist. And so the next level is 52, and we're only a few dollars a barrel away from that. And heating oil is not giving us any help at all. However, if you want to look at something to buy, heating oil has been the strongest of the component because it's still at the 61% retracement on the long-term weekly. So heating oil is holding up. Part of that is a seasonal phenomenon, but it's still the stronger of the complex that we're looking at. So that's just something on a historical basis, and seasonalities that helps a lot. But that's really what we're watching through here, because I know oil is used by just about everybody. The biggest beneficiary of lower oil prices, folks, is China. And, the Chinese market should be screaming to the upside, and it had a very minor rally compared to what happened on the 18th in the stock market. We bought them on the 16th, of course, and then the 18th was the, come to Jesus moment, and, the market was up 400 points. So all of that, I think, is, very, very important to look at. But you have to respect the market that comes off that bottom so fast, because it was a perfect 61% retracement on the NYSE, and we had a lot of things. I mean, the breadth wasn't that good given the fact that the market was up 440 points, but it still makes it look like it's got a spot to be pretty good. That's what I would think anyway. I wanted to mention, first of all, I want to wish everybody here at TFNN and all of our listeners the happiest of holidays. This is a wonderful time of the year. I really don't do much the last couple of weeks of December. I never have ever since my days at Drexel. And I really try to help as many people as we can during this time. And I'll tell that story when we get back after our break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have a long-distance call, almost as far away as the North Pole. We got our friend Mike from Thailand. Mike, are you there?
Hi, Larry. Can you hear me?
Saiwadi, my friend, you're coming in loud and clear.
All right, that's fantastic. Larry, a couple of things. I don't know if you mentioned it or not. I think you did, but I forget. You know, I had my fingers real busy. When's the next turn date on the Bradley model?
January 3rd, I believe, Mike. I'm getting ready to do the model for 2015 right now. I've got the first couple of weeks of it in, but I have to double-check it to make sure that it's correct. But I believe it's January 2nd or 3rd is what it looks like. And then it turned negative for 3 or 4 weeks, and then after that I hadn't ran it into February yet. But I'll have that done by tomorrow.
All right, well that's okay. All right, and then what do you make of? There was a real explosion in all the mining stocks, high in volume. That is last Friday. Do you have any comments on that? Have you looked into that at all? Have you had the time?
I looked at it, Mike. I looked at it a little bit. I thought it could be just a fact that everything was going up and everybody wanted to buy something. So I don't know if it's good or not. All I know is that what we're pulling down here in silver and gold, we're making 61% retracements here coming into the holiday weekend. And if gold can hold that 1170 area and silver can hold $15 an ounce, I think they've still got a chance, to go to the upside. They really had a good chance, 3 weeks ago, but as we mentioned, right after, it started down off to the 1239 level in gold, that it was probably going to have one more test, and that's what we're having. So we're still not out of the woods on the bear market yet, but I'm starting to see signs in the gold stocks, in the XAU and the HUI, that we might be at a really significant bottom here in gold. We're going to know very shortly here in the next few days, maybe even today, whether this is going to hold or not.
Yeah, well, I kind of, that Friday's day and that explosion of volume was the hook. It sucked me into going long gold and silver, and I'm paying the price for it now. And anyway, one last question I have for you, and that is there was a lot of high volume days on all the major indexes, on the Nasdaq, on the Dow Jones Industrials, on the NYA, and on the SPX. Are you with me?
Oh, yes, that was very important stuff. No question about it, Mike.
So I'm wondering if we could be I'm wondering if we could be right, this session now, we could be in the midst of key reversals, as early as today, because those volumes were so high. What do you think of that?
Well, I don't think it's going to be this week for a couple of reasons. One, it's a positive week for the market doing that reversal on the 16th. The second thing is that the volume is way down this week. I believe the day after Christmas and the day after Thanksgiving are two of the smallest volume days of the year. That doesn't mean you can't get some wild moves. But you're coming into that area the last days of the month, 29th, 30th, and 31st, and the first couple of days of January that have such a tremendous high bias. I mean, those days are better than 70% chance of being higher. So I think maybe midweek in the first week of January is where I'd be looking for some type of reversal. I have to respect what happened on the 16th, because when it gapped up like it did in the S&P and just continuing to go higher on that day, boy, it was certainly trying to tell you that it wanted to go, a great deal higher.
I'm going there now. I'm just looking at the 6. Oh yeah. You sure you're not talking about the 17th on the S&P?
The 16th was the bottom, and the 17th was the big explosion to the to the upside. So that's what I was referring to.
Mm-hmm. And then it was Friday's session that we really had volume. I mean, we had volume going up so high that we had volume. It hasn't been that high since the October 15th low, and we had a failure of higher price on the S&P 500. And the same thing goes with the Nasdaq. Same story. Failure of higher to make a new high, and then we're going back into the October 15th, volume-wise, and the NY, of course, that's going back into October 15th, and now we're actually down on today's session. So I'm wondering, and I know I appreciate what you said about the next 2 weeks are going to be really dull because of the holidays, but I'm wondering if we could have sort of like an anomaly here, and we could be headed lower in these next 2 holiday weeks when everybody takes off, because of the fact that we had such heavy volume last Friday. If we could in fact have a turning point. What are your thoughts on that?
Well, if it starts down, Mike, you're probably right. But until it starts down, I don't really see that happening. I would have to see a down day of more than 200 points in the Dow to at least alert me to the fact that this could be happening. The rest of it, really doesn't mean very much, because when you can go up 440 points in the Dow, and I know that's a small index with just 30 stocks, but that still is a very powerful thing. And it caught the news quite a bit, too. I have not turned wildly bullish or anything like that. I'm just extremely cautious here because of the way that market came out of here, much like it did on October 15th when we hit that perfect fib retracement at the 618 level. We came out of there very strong, then backed off into December. And it wouldn't be unusual for the market to make new highs here coming into the end of the year and early beginning of the year. It's certainly got a good start. Hey, you guys everybody listening ought to be really afraid, because this is the first time I've been really scared in a long time. That market really came out of there really strong. It's trying to tell us something. And so be real careful, Mike, because that powerful move coming off of December 16th must mean something. I don't know what it means yet.
And this is where, it was just a reversal. And going into the end of the year, we're going back up, the way I read it. And, of course, that doesn't mean that I'm right. But, it was another bounce coming up. It's saying we're not quite ready until next year, when everybody will be ready to sell, because then they can take their tax, they can take their capital gains next year. That's one thing on my mind. But, I know I keep beating a dead horse here, but even the Dow, that volume coming off of last Friday, I keep thinking of what Tom says. When you have high volume coming off of a high, that's a bad sign. That's a topping sign. You see, and it's happened in all these. It's happened in a good 4 of these major indexes, and the industrials, the Dow Industrials. That's another one there. And anyway, there's something fishy going on, and the bounce didn't surprise me at all. I was actually short. I covered the day before the bounce because I figured it's got to come. But I'm also thinking now, are you aware of the fact that a lot of countries in Asia, they don't have to worry about a capital gains tax? They don't have capital gains taxes and investing in the stock market in some of the countries in Asia, so they wouldn't care about selling into this now. Did you know that?
Yes, I'm aware of that, but that's never affected what I've looked at, because we're the largest and the most liquid market in the world, so that's the one that I'm really watching, more than anything else.
Well, you have a salient point there, that's for sure. But I'm hoping. It'd be nice to see an anomaly. It'd be nice to see us reverse here on these markets, because I keep looking at your favorite index, the NYA, and again, that goes back into October 15th, and we're down right now as we speak. And but you're looking for, like in the Dow, you're looking for a one-day move. You're not looking for gradual moves down on lighter volume. You don't necessarily are too friendly with that idea, are you?
No, not right now. No, I'm just basically, looking at the holiday week here. Tomorrow's going to be a light day. Wednesday's going to be a half day. Then we have the holiday, and then the day after Christmas, I believe, is a full day. But the number of people that are there are very, very sparse. And the number of people trading that day are very, very sparse. But you can get some wild days just because of illiquidity during that time. So I'm usually around on the day after Christmas, but only for, watching for something, an outlier event to occur. But other than that, I don't have a whole lot of interest in it.
Well, what scares me is, I'm still long gold and silver. I'm long SLV and GLD. And anyway, I didn't stop out just because of that anomaly with the shares on Friday. And now what worries me is just what you're saying. We're going to see we should be seeing 2 very low volume weeks for the rest of the year, starting like now.
Today.
Or, yeah. And I'm worried that they're going to try to smash gold and silver further, to test the lows, because we broke below, some key supports, but silver's looking like it could bottom now,
Yes, it's making a nice head and shoulders pattern for sure over the last 3.5 weeks, so that could be a good sign, but we have to wait and see. It's still 25 cents away, so just have to be patient. It's hard to be patient on days when it's quiet, so this is what you have to train yourself to do.
Yeah, but it's touching that rising trend line of support. You follow silver?
Oh,
right
yes,
now.
I posted that into Tiger TV. I think it's a beautiful, picture of a head and shoulders pattern. There's no question about it.
So if we bottom in silver now, I'm hoping we bottom in...
Mike, you keep using that word hope, and that's not a good trading word, buddy.
I know. And, a guy by the name of Richard Russell used to knock everybody for hoping, but you got to remember, it's Christmas time, and I'm hoping for a Christmas present, and maybe that qualifies a little better.
That could be. The good part about it is that you have a Christmas present due. So whether that's going to happen or not, you'll have to wait and see.
Yeah, I'm gonna do the Jesse Livermore thing, and I'm just gonna hold on and hope this time, because I'm afraid if I'm looking just like you. I'm paying attention. We could see an outlier event, and we could see these markets actually rise. Somebody could come in, whatever, Larry. But anyway, I kind of don't know what I'm talking about at the moment. But
well, then we better end the show then. Then we don't want two people on the air that don't know.
You don't have to end the show. You just maybe you ought to take.
Well, we appreciate you calling in, because I know it's an odd hour over there, and you're a long way away. So we always like to hear from you, Mike.
Thanks a lot, Larry, and all the best. And if I don't hear from you before Christmas, have a great one. Okay.
You bet. And, thanks a lot, Mike. Happy holidays to you.
All right. Same to you and all the Dens. Bye. And all the Tigers. Bye.
Okay. All right, folks. We've got a couple more seconds here before we come to the last break of the day. And I posted in the chart for Tiger TV, I posted the long-term chart for the euro. I've also brought in the shorter-term daily chart on the euro. And as you can see, we've had these 9-day rallies that have appeared over the past few weeks. We just had one recently, and now we're heading down. It really looks long-term that we're looking at 115 in the euro. We've had a slightly lower low than we had on Friday. We rallied just 60 or 70 pips last night, which it does all the time. But the euro still looks like it's heading down a little bit lower. I haven't got time to put the next group of sets in. I've got a really good trading idea coming up when we come back for the final hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I'm going to try to give you a little Christmas present. Hopefully Santa won't do anything bad about it, but I posted a chart of the Australian dollar versus the U.S. dollar on a long-term basis, and you can see that we've made a 1.618 expansion with an ABCD move there. The weekly chart on that brings us really close to the 61% retracement on the Australian dollar versus the U.S. dollar. But the trade that I'm seeing here is the EWA, which is the ETF for the Australian shares. If you look at this chart, you'll see that we bottomed down here on the 16th. Just perfectly, and it looks like we're getting ready to have another bounce. We got our final caller for the week this week, for me anyway, because I won't be here Wednesday. Jerry from Southern California. Jerry, are you there?
Yeah, I'm here, Larry. I'm in
what can I do for
California.
you?
I mean, way north.
Oh, okay, so you're up by the Oregon border then.
I'm near the Oregon border. I'm up in the mountains here.
Oh, that's a great area.
Hey, back in 2007, you made a remarkable call about events coming into the astrological cycles of March 6th to March 9th. And this is back in, I remember, September 2007. And, of course, you hit it to the day. And I'm wondering if you foresee anything in the next year or two like that.
Well, Jerry, the biggest one I saw was the one on April 23rd and 24th. That was the biggest day that we've ever had astrologically wise as far as energy, but absolutely nothing happened. I don't know if it's because it was just totally wrong or, usually the astrology things work pretty good, and that was the biggest one we've ever had. We've never had a group of cycles like that in 25,000 years. But that one didn't work. Some of the other ones, did work. What I try to do, Jerry, is I look at the patterns. That tells me where the prices are. Because if I'm at a major Fibonacci level where these patterns are coming together and I can recognize it as a Gartley or butterfly, then that's important to me. And then if there happens to be a Bradley date there or an equinox or something of that nature, then I'll add to it. But the astrology part is the very last part that I look at because I understand it the least. And it's the most deceptive of all the things to try to find is where that time cycle is. But coming into the new year, we have a really big one on January 3rd. That happens to be the next key Bradley date. We had one on the 15th, and then we had another one here coming in on January 3rd. So that's all I have so far.
Okay. Larry, one other question. I was in Tucson last winter, and I was looking for a place to go because I'm really in the snow country here, and I kind of really liked Oro Valley. Mm-hmm. I know you live in Tucson, but yes. Do you ever get those dust storms that they get in Phoenix?
Yeah, we get. They don't get them in Tucson, but we get them on the way between Tucson and Phoenix because there's a big stretch of desert there in between the mountains. They only happen about twice a year, and really, they're once in a while they'll get bad. I've only been caught in one mudder, and that's where you get the dust storm and the rain coming together, and your car gets covered with mud, and that's only happened once to me in 20 years. But they're not any worse. I mean, they're far less than tornadoes and stuff like that. But that's about the wildest thing that we have there are those dust storms. But they only happen about twice a year, and it's usually only during the spring and winter.
I had a friend who went through one of those, and he ended up with San Joaquin Valley fever, and it just about killed him.
Yeah.
My other thing is there a favorite place in Tucson that you like?
I like everything about Tucson. Hey, we have to go here, my friend. So happy holidays, Jerry. And drop me an email at LarryPesavento@gmail, and I'll answer your questions, buddy.
Thank you.
Thank you. Happy New Year, everybody. Merry Christmas.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.